Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey look, we're back behind the mic fired up because we're talking about a company that's going to have a dividend soon, and they pay a fat dividend. What I want you to know is this: the stock has been crushed recently, but it's not just recently. This goes back almost to last year. But this is one of the biggest companies that you'll ever know, and you see their trucks driving around every day. We're talking UPS. We're going to talk about how to use the current stock price to our advantage so we can get involved today. I'm going to show you the charts, going to show you the great entry point, and I'm going to show you the trade I'm in right now. I'm using the poor man's covered call. This is what I'm here to tell you. We can use UPS for a covered call, a cash secure put, or if you want to do a poor man's covered call, I'm going to hold your hand right now so you could amplify all of your profits using less capital, yet trading one of the bigger stocks on Wall Street. So let's go ahead and get to this. If you like hearing about generating income, collecting dividends, using covered calls to print money, and then take those profits and buy dividend-paying stocks, then you've come to the right place, because that's what we've been doing here for years. I've been on YouTube since 2016 talking about covered calls, cash secure puts, selling premium. And now we talk about dividends because I am retired. I retired when I was 55 years old in 2022. So here is the deal. I literally live off dividends and covered calls. And that's how I am able to live the good life, because we do it the best. So look, if you like anything you hear today, I want you to subscribe to the channel. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. So for some of you that might have just found me on the internet, where you been? I'll tell you what, we have been doing this. I've been showing you my trades. We've been talking about them for years. And that's what I do here. I talk about my trades, so maybe you could pick up that little bit of information that helps you with your game, helps you with your trading and investing. So here's what I do. I actually use covered call writing and cash secure put selling to generate income. We use that income to live in retirement, pay the bills, live the good life. But what I love to do is take some of that income, all of this income that you see that I've made so far this year. It's only 4.5 months into 2024. We take a lot of that money and buy dividend-paying stocks. Now, let me bring you up to speed real quick. We do write covered calls. That is my business, generating on average over $30,000 a month. Then what we do is we buy dividend-paying stocks. I love monthly dividend-paying stocks, and you can see right here, we've been doing rather well. The goal is $10,000 a month this year. Right now, we're ebbing and flowing in between that number. You can see last month I came in at 15, but in February we came in at 8. Dividends tend to fluctuate. What I want is the lowest number to be 10,000, and that is the goal. Let's go ahead and talk about UPS. And the reason I just showed you my numbers for the year is just for credibility. Everybody wants to know the numbers and won't listen to anybody unless there's a little bit of proof behind everything. I'm not here to take your money. I do have a membership. I'm going to talk about the membership. You either want to be a part of it or you don't. And if you get involved and you don't like it, I'm not going to needle you to stick around. I'm too busy making money, just like we are here with UPS. This is my current poor man's covered call trade on UPS. Now, what's important to understand here is where UPS is trading when I got involved. It was trading in and around 147, and it fell. It fell to 143. I went ahead and bought 5 Leaps call options because, again, we're using the poor man's covered call, where we use Leaps call options to simulate stock ownership, and then we write covered calls as if we own the stock. That's called the poor man's covered call. It has a technical name, but most people call it by that. Here's the deal. We can use less capital than actually buying the stock. Notice, had I bought 100 shares of UPS at $147, I'd had to pony up $14,700. Now, times that by 500, I would have had to pony up $73,500. We're not doing that. We're only putting $21,000 at risk when I buy those 5 Leaps call options. Now, look, this isn't going to be a training class on the poor man's covered call. I have tons of videos on my website, and if you download your copy, your brand new copy of the 2024 Poor Man's Covered Call Tracker, which has all of these calculators that we're going to talk about, you get videos inside the resources tab that talks about all of this. So in the description below is your brand new 2024 Poor Man's Covered Call Tracker that has all the calculators such as the expected stock move, where's my leaps call option expected to be priced, and my buyback calculator. And of course the tracker itself, because we don't write just one covered call. You can see we write multiple covered calls. Well, in the case of UPS, that's exactly what I've done, because here is the deal. We went ahead and got involved. We bought those 5 leaps call options, paid $21,000, and now we're writing covered calls. You could see, this is for the members, by the way, when you're a member, you could track every single trade. Our very first covered call we wrote, we had a very nice setup. Stock was trading at 147X. I wrote the 155 strike. Got paid $2.22. Stock fell. I bought that option back because every option is live. I could buy it back, alleviate the obligation, and I don't have to give up my shares. And that's what happened here. We pocket $798. Now remember, this is on $21,000 invested. I make almost $800 on my first trade. And notice it only went for 18 days. Stock had fallen. We decide when the stock's trading at 46.96 to write the 150 covered call strike, meaning the stock's trading at 147X. I'm going to give my shares away at 150. They pay me $3.10 for that. Well, the markets are falling and so does UPS. I bought that option back for $1.50, collecting $1.60. We make almost $1,000 on that trade. I'm thinking to myself, the stock has fallen. I'm going to go ahead and pick up another leaps call option. A leaps call option allows me to buy somebody's shares at a certain price, so I have the paperwork that allows me to write a real covered call on shares that I don't own. I own the right to take these shares from somebody, but not the real shares. So I decide to buy another leaps call option so I can reduce my break even. When the stock's trading at 43X, I buy the very same leaps call option and only bought one of them. But hey, now we have 4 leaps call options for which we can write covered calls. Right now I have no covered call on the books. I pulled that trade off the board because I felt there was going to be a move in the market. That's actually what happened. Because when I pull this off the board, the market does fall and then it rallies a little bit. And over the past couple days, it's rallied quite a bit. Look where UPS is at. We're going to go to the charts right now. I'm going to show you why the entry right now is good for UPS, and I absolutely know you're going to love it. Now, real quick, I do have a membership. If you go to cptdashboard.com, click Upgraded Dashboard, I'm going to show it to you here at the end. All my members get all of my trade alerts. These are all my trades for April alone, and we still have a couple days left. Right now, $32,800, and we're getting ready for an incredible May, because in May, my very first trade could come off the boards, knocking down $21,000. So look, if you're looking for great entry points when you buy stocks, I show my members these all the time because I'm trying to find great entry points. Look, I've been in this game so long, that's the first thing I truly realized. You have to have great entry points to give us the most favorable chance to be successful. How many times have you gotten involved with a stock when the stock's trading at the tippy top, you think it's going to go higher, and then it comes down kicking you in the ribs? That's how most of us investors get kicked in the ribs, because a lot of us fall in love with these stocks that go higher. Even beloved Nvidia that everybody loves, had you own it over the past month, you would have realized an all-time high, going out and buying a brand new car on your paper wealth, and then it falling literally hundreds of points. Those Nvidia investors kicked in the nads, and they ain't too happy they bought that car. Nvidia is going to go higher because, quite frankly, it's going to go higher. The AI craze is incredible, and the real trade is not Nvidia, it's SMCI. I love SMCI. I have control of 300 shares of SMCI. This is not a stock recommendation because if you cannot stomach 30 and 40 point moves daily up or down, stay away from it. But the real trade in AI is SMCI. They make the servers for which all these companies, Facebook, Microsoft, Google, Amazon, they have to buy the server hardware that runs AI, Well, SMCI uses NVIDIA chips. Facebook, Microsoft, Google, they need servers, right? They're not just going to take chips and create their own hardware. They're going to go and buy SMCI's hardware. And that's what they put their software on. I'm getting away from the UPS trade. Let's go ahead and take a look at that. Again, cptdashboard.com, click upgraded dashboard. You want all these trade alerts. You have to sign up. I give you a 1 free month offer. Absolutely the best deal on the internet, because this is what I do, man. This is my job. So here's UPS, and I absolutely love it. Now, you know where I got involved. When it was trading in and around 147X. And I'll tell you what, love this entry point. Because I always talk to you about what? The sandbox trade. If we can find a stock that has a sandbox trade, we'll take that 10 times out of 10, because that's what we want. Predictable stocks, so we can get involved when they're trading at the bottom of their range and hopefully write covered calls, and they take our shares away and they come back, right? Stocks always fade back. They move higher, they fade back. That's what they do. So if you're ever buying at the top, chances are you haven't put yourself in a good, favorable position to have success. Why? Because you bought at the top and Wall Street takes profit. So we want to buy at the bottom of the range. There's over 8,000 stocks. You don't have to be watching just 2, 3, or 4. You got 8,000 of them. And I'll tell you what, the S&P 500 are 500 of the best stocks, and they all have various trading ranges. Find the ones that absolutely are trading at the bottom of their range. We get involved. We pick up the crumbs. We move on. We don't need to hit home runs to be successful. I want to hit singles and doubles. And hey, even the greatest singles and double hitters in Major League Baseball, every once in a while they hit a home run, right? But the key is they're in the Hall of Fame because they're hitting singles and doubles. And that's what we do. When UPS is trading at this beautiful range of 147X, that's where we want to get involved, because we know Wall Street will bring it back to that range. Let's take a step back and look at UPS over the past couple years. You know, the stock was trading at all-time highs. I think it was over $225 a share. Life was good. Then things start to happen. It's called inflation. And inflation starts to kick everybody in the ribs, and it kicks UPS good too. Falls down. You can see UPS gets down to 170X. Then they have problems with their union contract. Falls down to 140X. And now this great company, this company that has a fabulous dividend, in fact, they've raised dividends every year, and they're so focused on that fat dividend, to be honest with you, they would rather fall on a sword than cut that dividend. So UPS is now trading in the 140s, and it gives us that perfect range. Again, this is 3 years out. Look at that range developing. Is UPS a 180 stock anymore? No. Is it a 170 stock? Not yet. I don't even think it's a 160 stock. It'd be lucky to be in the 150s. But it has. And that's what we're going to work with, because right now it's trading at 147X. We're going to use 147 as our bottom. Now, granted, it has fallen below 147, but that was the union talks, and that was the recent investors meeting where, quite frankly, they told the investors not what they wanted to hear. They sold the stock off. But look what happens when it comes back. It's trading essentially off the 147. So that's where I'm going to put my money to work if I'm going to put my money in UPS, in and around 147X. Now, here's the play, because this is what I love. There's a dividend coming, and with most stocks, you get a nice little dividend run when it's trading at the bottom of its range, because Wall Street has sold it off. Now the stock's undervalued, and here comes the fat dividend. Do you understand this dividend is $1.63? And notice, it has been $1.63 for years. Wall Street's going to come looking for this fat dividend, and they may run it up. Recently, they haven't, because of all this bad news just pounding them. They can't get off the deck. But if all the news is out and earnings wasn't that bad, we're going to start finding that sandbox. And the sandbox could mean a decent little dividend run. And if you've never heard of what a dividend run is, well, it's when Wall Street sells these suckers off and they know the dividend's coming. About 2 weeks before a dividend, Wall Street starts to move them up to collect the dividend. It happens with tons of stocks. I show the members that every time I do a covered call with dividend capture trade using the CPT dividend premium dashboard. See, when you become a member, the CPT dashboard has a premium dividend dashboard inside. All the stocks that are going ex-dividend in the next 2 weeks. You're able to sort them by the dividend. There's so much data. I mean, I would show it to you, but we're running out of time. Go to cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer, okay? Now, with that said, UPS is on that list, and you can see where the stock's trading. Now, right now, it's not trading where it's going to give us a dividend run, but hey, maybe this is the dividend run, but that's actually the earnings run. Do we get the stock moving into the 150s? I'm not sure, but look at this. When it was trading at 147X, that's when I got involved a month ago. So it's trading right where I need it to trade for me to get out of this trade as a clean deal, right? Because all I need is for UPS to trade in and around 147X, and my Leaps call option will be break even or a little bit better. And what we've done with the poor man's covered call is written all of these nice covered calls, which right now there's only 2, but chances are I'll have a 3rd or a 4th, depending how I play it. Right now, with earnings behind it and an X date coming, I got to be careful that my shares aren't taken away during this X dividend window. It is a great opportunity for me to get involved because it's trading in and around where I think Wall Street will support the stock. Now, real quick, this is the 2024 Poor Man's Cover Call Tracker. And in the tracker, you have all the calculators. And what you really like are all these little videos here. I actually show you how I use the tracker. And I've used the tracker ever since I created the tracker many years ago. The free tracker is on my website. Doesn't have all these calculators, but it is great to track your current Poor Man's Cover Call trades. But more importantly, inside, it has the initial trade setup. Look, man, I'm not selling you at this point. You either want to up your game on the Poor Man's Cover Call or you don't. Here's the initial trade setup. This is golden rule number 1. You absolutely need to run every trade inside the Poor Man's Cover Call initial trade setup so you know your profitability. See, that's the key. Most people that get involved in a Poor Man's Cover Call trade, they spend too much money. And if you don't know what that means, you'll learn about it when you watch the videos because I show you exactly why. See the video right here? I show you exactly why in that video we have to make sure our cost for this trade is not that much. And the cost is the time value portion of this trade. I explained it in great detail. And in the resources tab, I have trades that I do and I have done there for you to watch. Get your 2024 Poor Man's Cover Call Tracker. Hey, look, I'm going to leave you right there. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.